Welcome back, guys. It's been a while. I've had a hiatus from trading, took a break because I had some exams to do and done them now. They're all good. We're going to be focusing on trading again, going into the Q4 of the year, Q4 of 2023, really refining on entries, management, basically the whole shebang with trading. I think psychologically, I'm there in terms of, do I want to overtrade? Not really. I've overcome that. I've overcome me revenge trading as well. Take a loss. We'll talk for a loss today as well. I close the charts. I'm done with today. So it's all about the long game, and I'm having that every day in my head play that it's a long game. It's a long game. It's a long game. If you keep repeating that and keep your psychology intact, I guess, or on track, then you're gonna survive in this trading world and the investing world, however you want to put it. So I think it's very important to emphasize again on this video that longevity and trading for the long term, not short-term satisfaction, sticking to the plan is of importance here, to have that solid mindset when entering the markets every single day, because without that, you're going to find yourself overtrading. You're going to find yourself revenge trading. And what does that mean? You lose capital, you lose your profits. And at the end of the day, no one wants that. You're in the markets to make money. You're in the markets to succeed at trading. So the last thing we want to be seeing really is us losing. So we're going to be going through our trades for today and talking about the rest of the week and what actually happened over the weekend. So unfortunately, on the weekend, some war broke out again. This is not an unusual war. This happened in the past couple of decades. We've had Israel and Palestine, I believe. Hope I've got this correct. It starts some conflict again, physical conflict that is. And unfortunately, that does result in casualties. And it's never fun seeing human greed take over the world. And of course, human lives are lost in the process. Always not nice to see from the sidelines. And there's not a lot individuals outside the countries can do. It's up to governments and people in positions of power with lots of wealth that can really influence the game of that's going on over there. And unfortunately, I have to call it a game. It's a game between leaders and power and like I said, greed. People wanting more power or more control over certain lands, and innocent people, innocent children, women, unfortunately get caught in the casualties. And moving past this horrible subject, this does unfortunately, or I guess from a very selfish point of view, it does impact the markets, whether you like it or not. These events will impact the markets, these fundamental events. And the way that we as investors are removing the ethical aspect from it, this is how we can make money from these markets in current economic conditions. So obviously when a war breaks out, depending on which country is involved, actually take that back. When any war breaks out, you'll see safe haven currencies initially get a pump into. Safe haven currencies we're looking at are gold, which is XAUUSD, and we also have JPY, and there's also Swiss franc as well. And also, sorry, to point out USD, especially depending if USD are involved or aren't involved, that will fluctuate. So at the moment, we saw gold have a big gap up during the market as a war broke out on the weekend on Friday, and we also have JPY gain a little bit of strength, not too much compared to gold. So we're going to be looking at GJ on screen here. You can see the 4 hour. This gap actually isn't displayed. Here we go. The gap's displayed more on the 1 hour. It's a very small gap compared to what I would show in gold, that 70 pip gap. So you can see we hit a high during the just end of Friday, and then war broke out. Obviously, safe haven currencies have gained some strength, and investors flocked to those. 120 pips since the gap. We've tapped 181,300, and today, we also, on top of all this, we've had bank holiday in the North American side as well. So we've had lower volume, but lower volatility in that regard, but higher volume and volatility over the course of the war impacting the markets. So coincidentally, if we go to gold, we can clearly see that we reacted and stopped and stalled at a key level of 1812. Coincidentally, while we're at this level and over the weekend, a catalyst breaks out, and this catalyst unfortunately was war this time, and we could see it taking effects in the markets. And with this, actually was a gap candle, so about 240 pips, let's round up to, of a gap, right? That's a big gap on a currency pair or a commodity. So what we're seeing now, as the markets have digested that, gapped in, we still haven't recovered the gap. We haven't filled that gap, right? A lot of the times we'll see price create a gap, and that gap will eventually get filled over the course of the day or week to come. days or week to come, I should say. So today, like I said, North American bank holiday. What does that mean? Well, less volume, less volatility, especially in pairs like USD, or involving USD, I should say. And you can see that here with a clear range between these levels of about 50 pips. Could have traded the tops and the bottoms. Wasn't for me personally. And I'll show you my 2 trades that I took. The first one was on GJ. We're playing this short-term bias of safe haven strength to potential key areas for buyers to re-enter the market after this gets digested and priced in, as in the war. And we can see we had a nice reaction at 182.200. Unfortunately, this was actually, let me rephrase that, sorry. Fortunately, this was the best position to enter, or best price point to enter on at 182.200. And unfortunately, I didn't enter it. You can clearly see on the 1 minute a clear double bottom, which is nice to see. And I was trading at this time. I just had the wrong outlook at the time. So double entry there. You should have entered right here. Once this candle closes, rejecting, double top, stop loss 10 pips or so above. You can even take a stop loss even higher up here if you'd really like to feel safe. It was 17 pips. And then if we hop back to the 1 hour, and you can see, so we were talking about this area up here, 18200, and you're going for 500, right? You're targeting 500 because it's a key level, along with market structure showing support being created on the 15 and 30 minute and 5 minute, etc. So you can see price reacting there perfectly. So that was a trade, that was a target, and that was a trade for London. Unfortunately, I didn't catch the full move. I tried to catch the rest of the move, and we did that by a break and retest, classic break and retest of 181,800. And that was with volume. So London Open, we had that push down pre-London Open. We had London Open, a test of 800. I took off the break, stop loss above here, and I actually closed early. So I saw that we failed to break once, failed to break twice. We failed to break that 650-ish level, and I closed managing risk. I didn't want to risk too much into the markets. First day back, of course. And obviously, if I left that to go, I would have hit my 2.77R risk reward easily. Right, that's the trade done. Managed very aggressively. Overall, I should have just let the trade play out. Of course, in hindsight, you can say that. But at the end of the day, the best entry was up here. Moving on to our gold entry. If we hop back to the 1 hour and we look at gold and reset this chart, and we zoom in, there's not a lot of movement on gold, right? I'm not trying to play in this range. So we sort of break out of the range. That looked a bit tasty to me, right? Especially supporting USD strength here in terms of filling the gap, and also following the high time frame bias at the moment, which was USD strength with DXY above 106.300 at the moment. So how could we have entered this? Well, I thought a better entry would be off 1847.700, which is a key level for me. What happened was we got a break, we got the retest, and I missed that retest, so I didn't get in on that retest, so I took the breaker below with the new 4 hour forming, impulsive entry, didn't work out. You know, that's reason why I think that didn't work out. Because one, it's a bank holiday. I shouldn't really be trading New York. Makes sense. Secondly, an impulsive entry a bit before New York Exchange Open was also risky. We want to be taking impulses at New York Open, London Open, Asian Open, New York Exchange Open, or even London Close, sometimes New York Close. Those are the main areas you want to take impulses on. When there's higher volume volatility, you can even take it with data events releasing or news coming out. But those are the main prices that I'm trying to, or places when I'm trying to take entries, and unfortunately I didn't get that. Forced an entry and obviously lost out on it. We can see gold just ranging the rest of the day. I expect that range until tomorrow when there's no more bank holiday. So going into tomorrow, on the rest of the week, we've got PPI, CPI, we've got FOMC minutes, we've got GBP, GDP. So we've got plenty of data releases coming out, and I also want to see how the war gets digested into the markets when New York opens, when the banks are trading again, when everyone's back fully in the markets. Like I said before, it's very unfortunate the situation that's going on, but at the same time, we're here, this channel is about investing and how we can optimize our trading around this. So overall, not the best of days. I'll show you the market tonal now. You can see that, but going into tomorrow, we have a level head. We're expecting better movement and better volume.